Welcome back to the Banking on Data podcast, powered by Lumio Solutions, where we invite experts from across the community banking and credit union industry to share best practices for enabling risk-informed business intelligence. Welcome to the Banking on Data podcast series. I am thrilled to have back my good friend and sage in the banking space, the leader of investment banking there at KBW, Joe Barry. Joe, thanks for being with us again today.
Thank you for having me. I appreciate it.
Joe, before we jump in, just to remind our viewers who may have not been with us in a prior episode, what do you do there at KBW?
So I am co-head of investment banking, and I oversee our fintech practice. I run the banking group with my colleague and partner, Scott Anderson. And for 15 years prior to this, I ran our banks practice, which is a lot of what we're known for. And actually, you can see this. I don't know if everyone else can, but on July 8th, 2026, I'll have been here 30 years. So,
Wow,
yeah,
that's awesome.
30 years into my first job in banking, financials, and fintech.
That's a great lead in to, I think, the topic of today, right? Which is the world which you began in 30 years ago is just a tad different than the world where you're operating in today. Right? You said it there when in your intro that when you began in this space, you were leading a banking practice. And now that banking, is part banking, part fintech, right? Part technology. And the landscape is very different. There were, I don't know, 12,000, banks when, 30 plus years ago, and you're down to 4,500 now. Maybe I'm in the ballpark on my numbers if I don't have them precisely right. But you've got thousands and thousands of fintechs that are out there today. And so when you and I started talking about this topic recently, we started talking about the amount of time you're spending with community banks, and one of the things you pointed out to me was the increasing amount of time you spend with fintech. So before we kind of fully unpack that, maybe we rewind for a second and say, why do fintechs even exist, right? Like, how did this all come about, right? From the world which you were operating in to the world we are in today?
Well, look, I think the one that everyone will focus on is the regulatory overlay that pushed a lot of businesses outside of the four walls of the regulated banking industry, and that is true. But there's also another reason, and that is that the younger generations want access to financial services in a non-friction way with good user experience. And it is not walking into a branch. It is not logging into their computer. And increasingly, it was very much mobile on your phone. Increasingly, it's becoming agentic in that they don't want to actually even make the decision as to which bank to go to. They want to go to their agent and say, get me the best checking account with the best rate and serve it up to me. Now, that's not ubiquitous yet, but it is where we're going. And so, like in many organizations, whether it be, we talked about this in some prior podcasts, whether it be car dealerships to sell cars, remember that Ford and GM once used to sell cars, and now dealerships do. And it's gone full circle now with Tesla selling their own. Or in the payments business, where ISOs became the primary sales mechanism for credit card payments. In this case, I think it's the mousetrap to capture customer. And it used to be that the customer had to get 100% of their financial products and services from a bank. And today, you can do that at Walmart, and you can do that at Amazon, and you can do that on X, and you name the brand platforms out there with just a better digital experience that is frictionless. And so what I see happening away from the banking industry, and I want to just put another point out there, there's only 110 banks in this country over 10 billion in assets. So of the 4,400 banks that are left, there's only 110 of any size, right? And so they're fighting over a smaller and smaller shrinking pie. And then you have this small business, medium-sized business, and consumer customer segment that large organizations have paid money to acquire, and they want to monetize them. and they're going to offer a differentiated and better experience to do that. And they no longer have to have a banking charter to offer lending products, debit cards products, credit card products, payment processing, or even deposit accounts, right? Because there's third-party ways to do that. And that's what's causing this to happen.
So that um, there was an evolution, if you will, of for kind of a societal evolution there, right? And people realized that there could be a better way. And these fintechs perhaps didn't have were not as encumbered or were able to be nimble, and were able to build that better mousetrap, to capture the customer. Um, the the has the arrival of the fintechs, have they why expanded the pie, or have they taken pieces of the pie away from those traditional community banks?
I think it's the latter. I mean, I think the financial pie is growing as you offer more lending products and deposit products and payment products to segments that weren't traditionally bankable, then you increase the size of the financial pie. But I think it's more of a reallocation from traditional financial institutions to new players in the space. Only the very, very largest banking companies like JP Morgan and B of A and Wells have the financial fortitude to invest in technology to compete with these other technology companies and brand platforms like X. A regional bank is not going to be able to develop technology the way X can, right? They just can't.
Right.
And so you're seeing this movement away from the traditional bank. But what's happening at the same time, and you see it this year in particular with 25 fintechs seeking bank charters, big ones like Mercury and Chime and others, that what a bank is now evolving. And so I like to say I focus on fintech, but what I'm really doing is focusing on modern depositories.
I haven't heard that description, but that actually really puts a point on it, doesn't it? Right.
Yeah, I mean, if you lend at some point, usually when you get to 3 or 4 billion in receivables or balance sheet, you need the bank charter because you need access to FDIC insured deposits to provide durability of funding in the business model. Without that, you are subject to going out of business based on, a seizure in the commercial paper markets or borrowing markets. And that's why we have FDIC insurance to stop, financial institutions from going bankrupt when there's liquidity stoppages and crises. And so it serves to say that in a world where technology can be created by agents ever and ever more quickly, then the regulated four walls of the banking industry actually become a moat. And so you're seeing this full circle of companies that were trying to disrupt. Then they add lending, they want charters. Now the charter becomes the moat. And what a bank was is now what we're looking at today, which are these differentiated technology platforms sitting on top of a ledger.
That's a heck of a description, right? A differentiated technology platform on top of a ledger.
Right? It used to be a bunch of branches sitting on top of a ledger with
Right,
people.
right. Um, you had a fireside chat recently, and in that you talked about a an experience of that full circle moment that you just illustrated there. Um, so elaborate on that a little bit. Would you take us through that journey? Because getting that bank charter, becoming the moat, and then saying, right, we're actually going to do this in a different way is a fascinating story.
Yeah. So recently at the April 2026 KBW Builders and Buyers Conference, which we host out in Napa Valley in conjunction with our colleagues at Stifel Venture Banking, where we bring venture-backed companies, growth companies, and large companies together who are either building or buying. And we, like in many of our conferences, we put people together in one-on-one meetings, but also do some content. And I had the pleasure of doing a fireside chat with William Hockey, who is the founder of Column Bank. Prior to that, he was the founder of Plaid. Everyone knows Plaid. And he resigned from Plaid after they had announced their acquisition with Visa. And, in short, he took a bunch of the stock that was still privately held and he pledged it to get a loan from another bank to buy a community bank in Northern California. And William takes a very counter view to a lot of other people in that he doesn't think community banking's dead. He just thinks it needs to change. It needs to become far more efficient. You need technology that is modern and that the Main Street Bank can still exist, just in a much more efficient way. And so he has his own core and his own APIs and is able to acquire banks and bring that efficiency ratio down to below 25%. And if you can do that, then you can be pretty profitable. And so he's taking the view that he wants to become one of the larger community banks in the country, just delivering the product in a more efficient and tech-enabled way and taking all the friction out of the back office to make it more profitable. And so, and he had a lot to say around the importance of the banking system, the US dollar as a reserve currency, and the ability to offer access to the US banking system to people outside of this country. But that was one of the more interesting things in that you have fintechs who are creating better sales organizations to capture the customer and monetize what they've paid for in that customer acquisition. And they're approaching it from the consumer's side, from the small business side, from the micro business side, from the SMB and large business side. But then you also have now someone coming from within the banking industry using technology to transform what a bank is. And so, it's pretty exciting. It's a convergence of product, service, and technology, and sales organizations to reimagine what banking is.
Uh, you used a kind of a phrase that struck me that community banking's not dead, but it absolutely needs to change, right? It needs to be more efficient. We need to remove the friction from the back office.
Well,
So
it is changed, and is in a state of change. Some people just don't recognize it.
um, so that's where I'd like to pick things up is that point right there, right? Which is you've either embraced or are embracing, or you're about to get either hit by a truck or not hit by a truck and just die a slow death, whatever it is, right? But
Yeah,
the operating the ways of yesterday are
yeah. I mean, I don't think they get hit by a truck. It's just gonna slowly bleed out as people pass on, and the next generation moves their assets and moves their deposits. And the
yeah.
reality is that the way to originate all kinds of assets has totally changed. The 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 medium that people want to engage in finding those assets has changed, and it's continuing to do so. And the idea of the marketplace, which is well established on the consumer side, right? If you want to go get a mortgage or you want to get an installment loan or a credit card, there are marketplaces you can go to find the best deal. The same thing is happening on small business and medium-sized business. And it's I hate the word, but you're democratizing product and service that right now can only be given in a manual way to larger businesses because to be efficient and to be profitable, a bank needs to do it that way. And there are technology platforms like Mercury and Brex and Ramp and Meow that do that now in a very cost efficient way and provide the level of service and the ease of service that a larger company would get.
Yeah.
And they're going to that is the gold standard now, and you have to have it on the business side.
Well, and that's the you started with this yesterday when I asked kind of the opening question of right, why did this all get going in the first place? And you made a comment about, younger generations getting, essentially requiring there to be not no friction, right?
Yeah.
In their financial services, and it kind of it took off from there.
Yeah. Look, kid, we today go to Claude, we go to ChatGPT, and we are increasingly asking that AI platform to do things for us, right? I think we're only a couple years away from agents like that doing things like, okay, I've got laundry, have someone pick up my laundry and get it done. And it'll connect with another agent at a dry cleaner and send the car. Maybe the car doesn't have a driver. Right. Pick up the laundry, get it done, and bring it back. Banking services will be done the same way.
Yeah.
And there are platforms today where you can just go onto ChatGPT or Claude and say, not only open a bank account, but you can say, create a business for me. So you upload your EIN and your formational documents. They'll form the company and then open your deposit account. So the competition for the deposit account is happening before the company's founded, right? And it's being done agentically. Now, is that happening at scale today? No, but it's happening.
But yeah, right. Before it happens to scale, it has to start somewhere, right?
Yeah.
And it has to, right? You crawl, walk, run, and guess what happens after you crawl? Pretty likely that you walk, and after you walk, it's pretty likely that you run. So if you're
Yeah.
just going to expect that crawling is going to continue forever, right? We're not going to evolve. We're not going to progress. Well, that seems to be a bit foolhardy. Um, so yeah, the signs are there, right? You can either choose to look at them and read them and react to them or embrace them, or it's going to be, you're going to bleed out, right? As you said, right?
Yep. Hmm. Yes.
Community banking isn't dead was kind of one observation. Um, but it needs to change, and it already has changed in many ways. And so I think that kind of nuance that it's already changed, but there's more change coming, and you can either embrace that and be part of it, or if not, you're gonna get left behind. And so, right, you've talked about one of the ways to originating, the collection of assets has changed. Give us an example or two of what you mean by that.
Yeah. So I think everyone would acknowledge that on the consumer side of lending, whether it be credit cards, installment loans, mortgages, car loans, that you can go to an online marketplace and find all the different types of offers that could possibly come your way. In fact, bureaus like Experian will curate that for you, and they have your credit score and they'll serve up what the best deals are, right? And so that is now taking what was a product that was sold by a bank, putting it into a marketplace, and then wherever the best deal is, offering that product to the consumer without ever going to their bank's website, mobile app, or branch. The same thing's happening on the small business and medium-sized business side of the equation with business services, which is deposit account, checking account, ARAP, bill pay, spend management, all these things that um, larger businesses can get from their core providers or their banks if they're big enough, right? But if they're small, they don't because the bank can't make money on that. Why can't they make money on it? Because it's not automated. And we've seen point solutions that have expanded into full product sets. So the point solution of Ramp, which is corporate card,
Right.
which with spend management, now opening the aperture of what they offer to look more like a Brex or a Mercury or a Meow. So these are now ubiquitous and they're generating deposits faster than any bank that sits on Main Street in a large county seat or a state capital or wherever you want. And so the way that small businesses and medium-sized businesses and consumers are interacting with their financial lives has changed. So is community banking dead? No, but it's already changed. Just some people haven't figured that out yet, and that's why they're more bound and not growing and sort of, sitting in the dusty branch where no one comes in. Those companies won't get hit by a truck. They won't, won't suddenly go out of business, but they're going to slowly dissipate, right? Because the next generations of business leaders, founders, consumers are accessing that financial wallet, that financial life in a different way. And the competition's changed. What a bank is has changed, and you've got large um, players in different ecosystems, whether they be like an Intuit, which has QuickBooks and Credit Karma, or the credit bureaus like Experian and TransUnion and Equifax, whether they be large brands like X and XPay, Walmart and Amazon, even in a Home Depot, they all spend money to advertise to bring customers onto their platform, right? And so they have realized that there is no reason why they should just take a big chunk of the revenue that a customer can provide, which is the financial part of the chain, meaning payments, deposit, lending. Why just give that away? And they're not, right? So they are being now empowered by technology companies and even some of the core providers to offer those products to their consumers to capture some of that monetization. And we're seeing this convergence of all of these different ecosystems, even the credit card companies, which are adding quote unquote value added services, right? Yeah, Visa bought Pismo. I'm kind of ranging over here, but like it's happening
Yeah.
everywhere.
Yeah.
They want Pismo to be a true full stack core for their bank issuers. And in that they want to offer all kinds of value added services. And at some point, uh, they're going to offer those services directly to the small businesses and that are interacting with them through the networks. And so everything is changing all at once, and it's all converging. And I call myself a fintech banker today, and essentially in the banking space, I'm still a depository banker. It's just a different set of clients and a different set of technologies and a different mousetrap. And maybe I'm also a wealth banker because it's happening in the wealth space with Robinhood and Coinbase and others. Or maybe I'm an insurance banker because it's happening in insurance. Every one of these industries is in a state of change. And those industries aren't going away. They just look different. And
Yeah. That's,
it's back to the future, if you will.
yeah. I think that's a great observation, right? That um, people will dispute right, that these things have to exist. And the answer is yes, they do have to exist. That's right. That's not the argument, right? You said at the end there, right? These industries are not going away. They're just going to look and behave and be very, very different, right? Tomorrow than they even are today. And today they're very different than they were yesterday.
Yeah. Yeah, look, people still like to dispute. You'll hear people say, "Well, stablecoin, that's a problem looking for a solution, or a solution looking for a problem, rather." Um, the reality is that all of the incumbent players are incorporating blockchain and stablecoin, and they're going to use it for B2B payments. And there are platforms today, again, it's not scaled, where you can have fiat in your business checking account, flip it into a stablecoin, move it instantaneously on blockchain, and drop it into uh, your whoever you're paying into their account and convert from stablecoin to cash. And
Like that.
so yeah, and so what does that do? Well, it's instantaneous. There's almost no expense, and you've bypassed paper check and credit card rails. So that is real, and it's happening now. And Mercury and Meow offer that. Um, there are multiple tokenized deposit networks in formation. We're working with a group called CarryCoin, which is led by former controller of the currency, Gene Ludwig. And we have brought together a coalition of banks that are going to have their own network where you tokenize a deposit and move it instantaneously on chain. There, FIS is doing one, Fiserv is doing one, and large bank consortiums are doing one. These are all things that I think bankers would say, what's a tokenized deposit? Like, is it really necessary? Well, yeah, it is the digitization of something that used to sit in a vault.
Right. Right.
So,
do, do, do the how does a community bank start? I mean, right? There's like this is you're talking about, right? You know, Main Street, right? Kind of county seat, right? Institutions that have sat there and have
Yeah.
look, granted, they have evolved, right, over time, right? You know, I remember walking in with my passbook, right, and them kind of, putting it through whatever the machine, and it wrote in the, printed on the number. This is your new deposit, right? So, right, that doesn't happen, right? They have evolved. The question is, right, how do they evolve from here, right? How do they get comfortable with tokenized deposits? How do they get comfortable with fintech partnerships?
Yeah. Well, so that's why these consortiums are being formed, right? So trusted sources of trust. So Gene Ludwig and Carry Coin, Gene is the creator of IntraFi, which is the largest deposit sweep business in the country, right? And that's how you get greater levels of FDIC insurance on deposits. Um, Most banks are on Fiserv or FIS cores. Some are on Jack Henry, but a lot of them are. And so if you can get access to a tokenized deposit network, and lots of banks are doing it, you'll follow suit, right? That's how it'll happen. But it is that change is already in place, and the free movement of those deposits in a tokenized manner means that 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 storefront on Main Street doesn't matter, right? And so there's going to be the core fundamental of a community bank, right? Its core deposits, and as long as they have core deposits and they're relatively cheap, you can invest in securities, you can buy treasuries, you can make some loans, and you'll make some money. But when the movement of those deposits becomes fungible and the deposit insurance moves with it in a digital manner, on chain, instantly, then investors or customers who traditionally have not shopped, it'll be served up to them. I'm going back to that marketplace thing.
Right.
A marketplace for deposits, a marketplace for financial services and wealth, a marketplace for lending, a marketplace for business services. Um, this is where everything is happening. So the front end of a bank that used to be uh, a storefront on Main Street or a branch on a road, or then became online. It's going to be sort of AI generated, mobile, and instantaneous.
If a bank, community bank, embraces those concepts that, um, money movement can be instantaneous, it can be frictionless, it can be cost free, it can eliminate fraud, we can eliminate paper checks, all those things. Um, and they essentially are participating in the marketplace along with all of their virtual competitors, but they do have a physical location on Main Street
Yep.
where you can go in, and maybe you're not going because you have to go in order to take your passbook in to make your deposit, but you're going in because you want to talk
Yeah.
strategically about, right, I'm thinking about doing this with my business or my portfolio properties. Um, it feels like that relationship, that intelligence, right, the human in the loop, so to speak, right, has value, but only if those, I mean, I'm going to go as far as saying commoditized utility, right, features
Yes.
are all on par with everything else.
Yeah. Look, my view is that yes, the human in a loop and having a place to go, that'll never go away, right? That's why JP Morgan continues to invest in branches, right? However, you just made a very good point. Every one of these products is commoditized. Every one of them. And that is why companies like Amex, which offers a credit card, is a lifestyle company. It's why they partner with airlines. It's why they offer you Resi. It's why they give you points. you're not using that card because Amex is a better credit card than Visa. You're using it because you get more perks.
Yeah.
So we are seeing across the board all the credit card issuers creating lifestyle brands and then now advertising, right? Media commerce, where you can they take the data they have from the spend for you individually or the merchant and allow advertising to happen that creates more spend, right? They'll say, "Hey, we saw you bought something at this men's store. If you go there and buy something today, we'll give you 5% off or 10% off." Right? That is trying to build an experience around a commoditized product. It'll be the same thing for every other product and service around the financial services space, whether it be small business or consumer. And I think the ease of service is the one thing, and then the lifestyle, the community. We talked about this once before.
Right.
Will be what holds you in place. And we're and that is and to do that you have to take all the expense out, right? Because you have to give something back to have
Yeah.
somebody use your commoditized product. I mean, no
Right.
one would argue that a mortgage is a commodity. It is, right? That's why the companies that have huge mortgage operations trade at low multiples. They're cyclical and they're commoditized. There's going to be community around that. And the way I kind of got my head around it is community used to be geographic. Like you lived in the Southeast and you lived in North Carolina and NCNB was your bank, which then became Nations Bank, right? Which became
Right.
Bank of America. But geography is not how you, I mean, it can be in very small point solution or point pinpoints. Like I'm in Palm Beach or I'm in Sarasota or I'm in Miami. And, that's why Capital One will put like their little coffee shop branches, in these places. But the idea that you need to have like branches on corners, I remember CEOs talking about corners and car volume and, foot volume and people walking in, like that's just not going to happen anymore. And it's replaced with the new community, which is what have you given me lately? What kind of experience have you given me? And the
Right.
experience starts with how you purchase and how you interact, but it really then revolves around what kind of cash back are you giving me? What type of perks are you giving me? Hey, do I get a discount at my local restaurant? That's where it's going. And that's why
I'm
Walmart and Home Depot and Amazon and X have this huge advantage, right? Because they can offer, like, think about like Amazon. Like if they want to truly get out of their own way and offer financial services, that just the breadth of discount they could offer across all the products they sell. Like it's a huge competitive advantage. It's like giving toasters away back in the 70s when you open a checking account. They used to give you a toaster. Now they can give you, whatever they want.
Yes. So the communities, right? The definition or the definite, I don't know if definition is the right word, but right, the representation of community is very different today than yesterday, and it will be very different in the future, right? It is boundaryless, it is virtual, it is right. Maybe it's a common interest, or maybe it's a common persona or a common characteristic, but it doesn't mean that you have to live within, 4 miles of that local branch, and it doesn't mean that, right, you all have to work at the same, you know company, right? So you're members of this credit union, right? Those boundaries are dissipating. It feels like that and we could talk about this stuff forever. I know, but the thought that's coming to my mind is that it's really all about the data that you have on those people and those constituents and right, you talk about those massive brands, those and even the cards becoming lifestyle businesses. The reason they're able to do all that, right, is that they have this massive amount of data, and so they can figure out the products they need to offer and who needs what, and it really comes back to if a bank wants to, they need to they need to be able to bring their costs down. They need to be as efficient as possible in the back office so they can offer the services. But it really starts with understanding, right, your customers and getting all the data on them so you can figure out, right, what you're going to talk to them about.
100%. Yeah. Yeah, I started to clue into that. I mean, like, we all know that Google and Apple have huge amounts of data and they advertise to you. When we were working with Klarna on their IPO, and I recognized that there was a really interesting phenomenon that they gave away the BNPL, the pay in for free. So the consumer doesn't pay anything for that lending product. So someone once asked me, like, this is so silly. Like, you've got 25-year-olds who are using BNPL to go buy their concert tickets for $200. Why are they paying it in for? And I said, well, they could use their credit card and pay 35%, or they could
Right.
use Klarna and get it for no interest. Well, it's makes sense to me. And
Yeah.
by building up that consumer base, they have, I think, 90 million consumers on platform now. That pool of consumers attracted merchants who wanted access to those consumers. And so then Klarna could ask those merchants to offer a merchant discount to create the revenue stream to pay for that loan. Now, that's all happening on the closed loop Klarna rail, right? And that means Klarna actually has what we call level three SKU level data on what the consumer is buying, what the merchant is selling, right?
Hmm.
The only people that have that are the credit card companies at checkout,
Right.
and they don't share that data. They use it, but they don't share it, very rarely. And so Klarna has this data on what you spend and when and how and where. And now they've got an AI data mining effort to use that to advertise direct on, to the consumer, or sort of give the merchant sort of the tools to understand, do they want to go blanket, they want to go direct to you. Like, the advertising channel will be as ubiquitous as the financial services channel, much like Google and Apple, right? And so I can see a day where financial service companies, as long as they have access to that data, and that's where you start to talk about the displacement of the credit card rails with other modalities of payment, where that information is owned by the financial institution, where advertising can be as powerful and as large as interest. And that is, like, it's called media commerce, and the credit card companies and the credit card issuers are all over it. That is where they're going, right? So it's build the lifestyle or the experience in the community, offer all those perks to take a business that's commoditized and make it more sticky, and then find different ways to monetize. In this case, it's going to be advertising, and I think it's across the board. And all this is happening. And so you asked me, like, is community banking dead? No, but if I told a community banker on Main Street, for the most part, can you believe that advertising is going to be your biggest source of revenue in the future? They're going to look at me like I have four heads. But it's happening, and it's happening right now.
I think I'm going to leave it there because that's a capstone comment, right? That is it, right? Um, it's not dead. It has changed. It continues to change, right? We are
Yeah,
in early innings of it, right? Of AI coming into the mix, but ultimately, right, that vision of, right, you're going to be a media commerce company. You're going to be you're going to be advertising, right? I think it comes back to, again, you've got local relationships. If you figure out and you've got data on those, if you can figure out how to run your operations, right, and play it, on that and level that commoditized playing field, then
yeah.
you can participate in this future vision, this future state.
That is what banks like Colin Bank and Erebor are doing, right? By using modern tech stacks to take out the cost and the friction, they can then offer, either be more profitable, which they are. Like,
Right.
Colin's probably the most profitable bank I've ever seen. Um, but at some point, you can take some of that profitability and give it back to the customer to enhance, the lifetime value of that customer.
Right.
And all this sounds crazy and new, but it's not, right? But bankers that were, banking in the 70s and 80s will remember they used to give away stuff to have you open a checking account.
Yeah, your toaster example. Yeah,
Right,
absolutely.
right.
Yep.
So it's the same thing. It's just a different give.
Yep.
BNPL is layaway. Like we just put new labels on stuff and put it back out there.
That's awesome.
Yeah.
I didn't think we were going to be talking about toasters here today.
Hey, it
But
makes it fun.
yeah, it's great. Thank you. I appreciate you taking this on a bit of this journey, right? I think that this actually really puts a makes it real, right? And I think hopefully it gives people some ways to think about this that are maybe a little less intimidating. Certainly, it's intimidating at the macro level, but right, you realize you can actually take steps towards this, right?
Absolutely.
And there are banks that are doing it, and there are partners that you can do it with. So it's possible.
Everything is possible.
Thank you, my friend. I
All
appreciate
right.
your time.
Good talk.